In this video, I am introducing a trading strategy that goes with the trend. It trades long and short, it has a great reward to risk ratio, and it performs well during bull and bear markets. This is Mark from tradingform.com and welcome to this video. This video is all about the volatility retracement strategy. The idea behind this strategy is when markets are trending higher and we have low volatility, we must be trading long. But when things have changed around and we have a short trend developing, but we also have high volatility, and this is the opportunity to trade short. In this video, I will show you how you can trade this strategy the way that I have set it up, but I would also show you the tools that you can use to do this yourself, to develop and test and optimize your own trading strategies. So let's have a look at the rules for this trading strategy. Now, firstly, we need to identify volatility. And I'm using the standard deviation of the daily price change. Next, we need to identify the trend. So we need to know whether the long-term trend is in an uptrend or a downtrend. And I am using a 50-period EMA and a 200-period EMA. Whenever the 50 is above the 200, we'll only take long trades. And when the 50 is below the 200, we will only take short trades. So we have got the volatility and we have got the trend. Now we need to identify the retracement, and I am using a simple percentage measured by close to close, and the retracement, of course, is against the direction of the dominant trend, which gives us an opportunity to enter at a slightly better price. Now let's have a look at some of the inputs into the trading strategy. On the screen at the moment is a trading form backtest model. Now this model is built in Excel, and it is a way for you to develop and test your trading strategies. I have used this to develop this particular strategy. Over here on the left we have inputs and variables that you can use to optimize the strategy for different markets. Over here on the right we have the results and the output, including the capital graph for this strategy. If you're not currently testing and optimizing your trading strategies, this is a system that could be of interest to you. So check out the link on the screen if you want more information about this. Testing and optimizing your strategies is essential in my view for every trader if you want to actually hit your trading goals, to eventually make all your trading easier and to be able to relax and know that you have historical evidence that your strategy actually works in the markets. Okay, so let's have a look over here at some of the assumptions and inputs. The key one for me is how we've got quite a tight stop loss. Using a percentage based stop loss, and I'm using 0.75% stop. And this means we are going to get, as a consequence, a fairly low number of percentage winning trades. This is inevitable. Whenever we have a tight stop loss, we have a low number of winning we have a high number of losing trades. However, this is more than compensated by the fact that we have a much higher average winning trade. We're using a profit target, again set by a percentage, and we're using a trailing stop as well to lock in the profits. So the net upshot is this, is we have a high reward to risk ratio, and you are protecting your capital with a short stop loss. We've got potential reward and maximum risk per trade. I'm setting the volatility maximum risk at 1.35% here. for long trades and the same value for short trades, but you can change these numbers. This is the key thing about using a model to test your strategies. You can play around with these numbers and see how it works for the markets that you are interested in. I'm using some strength closes here. I'm using a Bollinger Band close. So if the price closes beyond the Bollinger Band, we're saying that this is an exuberant market, so we're going to take our profits. This is in addition to the profit target. Also got a strength close. So we have 3 days with each day exceeding 1.25% of gain. We're going to take our profits as well. Let's have a quick look here at some of the results, setting this back to the original value. You can see that we have compounded annual growth rate 14.4% over this time period, which is from approximately year 2000 up to 2019, current time. Got a good profit factor, and that tells us that our gross winning trades is more than twice as much as our gross losing trades. So our largest winning trade and our largest losing trade, all of which are a function of our starting capital, which you can also adjust in this model. The market I'm testing here is the S&P 500 index, and we can see that maximum drawdown, which is one of my very favorite metrics, is low, 11.7%, compared to the maximum drawdown of 56.8% close to close, which happened during the 2008-2009 financial crisis. I hope you found this video useful. Remember, if you want your strategy and development tools, you want to hit your trading goals, make your trading easier, and you want more information about trading the financial markets, please go to www.tradingforms.com.